Hello, this is AK. I am back. Okay, in today's video, I want to cover a couple of points. The first point is to clarify something. The second point is to share what we might want to look out for in balance sheets. Okay, before I start, I would like to ask that you give a like to this video if you enjoy what I've been doing recently. You know, AK has been nice enough to do YouTube videos with his own voice recently. And if you like to have AK talk to himself more in YouTube, please give a like. Okay, AK responds well to positive reinforcement. Yeah. Okay. Now, the first point in today's video, uh, it was inspired by a comment left by a viewer. And it went something like this. It says, AK, can I ask you a question on investment? I follow a certain social media influencer, and his argument is that if companies declare dividends, it means they simply aren't putting or don't know how to put the money to good use to grow. Uh, would you be able to provide a counter argument to this? And then he went on to say that I'm confused because I've been doing dollar cost averaging primarily into growth stocks. And he says, I'm curious to hear your thoughts. Uh, well, my reply was, I don't want to give any counter argument. I don't like arguing in my old age. Very stressful. Bad for the blood pressure. Life is short, and I don't want to make it shorter. But I also told the viewer that why must we just focus on investing for income or investing for growth? You know, we can have our cake and eat it too. You know, there's not such a thing as this is right and this is wrong. Okay, we can mix things up. And in fact, I asked him, why don't you ask this same question to DBS, OCBC, or UOB? They are certainly growing, and they only pay out 50% of their earnings as dividends, which is already quite attractive. Uh, you can certainly have your cake and eat it too, right? And the viewer went on to say, thanks for the reply. This is food for thought. I have always wondered why this is the case because government institutions like Temasek are majority shareholders and need to see the money going uh, being paid to them, and maybe MAS. That's how the banks are pressured into paying dividends, and to that, I say I think the only time the banks were pressured on dividends was during the pandemic, and the MAS told them not to pay too much in dividends, right? To be prudent. So uh, that was the exchange with that viewer. Um, like I said, like in Chinese kung fu movies, there are different sects, different clans, and they have their different kung fu styles and techniques. And sometimes this style is better than that style in certain situations. It's the same when it comes to investing. So you can be an investor for income, an investor for growth, or you can be a hybrid investor. I don't think I'm a purist investor for income, right? I don't box myself into any category, right? And for example, I actually put some money in Hang Seng Tech ETF. Regular readers of my blog would know that. I have some money in Hang Seng Tech ETF, which is of course primarily an ETF that tracks the performance of tech companies in China. But I also made the point in my blog that the ETF does not pay a dividend. So if we want to make some money from the ETF, we have to trade the ETF. And because I have had some experience trading stocks, I was fortunate enough to be able to make several rounds of gains, capital gains from trading the ETF. Um, if I did not do that, I mean, I bought into the ETF maybe more than a year ago. If I didn't trade the ETF, I think I would have gotten nowhere. If you look at the price action of that ETF over the past maybe 2 years or 3 years, it has gone nowhere. So, and if you had invested in something like this and you just simply held on to it and the price has gone nowhere, and there was no dividends paid in those 2 to 3 years, and if you are a retiree, you have no earned income, how? How like that? Yeah, so when you invest in growth stocks and these growth stocks don't pay a dividend, you have to trade the stock to have some kind of income. So that's trading income, which isn't passive. And I said in my blog that I'm not too keen on doing it for the long term because I've given up on being an active trader a long time ago. I'm lazy. I prefer passive income, right? But my fingers itchy lah, so I tried lah with the Hang Seng Tech ETF. Fortunately, still not too rusty as a trader, and I made some money. Okay, I think that's enough on that point, which is point number one on the screen. AK asks to provide argument against advice to invest for income. No lah, I'm not going to do that. We have to find what we are comfortable with and just stick to it. If it works, if it works, good, right? That's what Deng Xiaoping would say, right? 黑猫白猫能抓老鼠的猫就是好猫。White cat, black cat, as long as the cat can catch a rat, is a good cat. So that's it. Move on to the next point. The next point, which is actually also related to point number one. Just to end it with a couple of things that I thought of. A famous investor said this: do you know the only thing that gives me pleasure It is to see my dividends coming in. Who said that? It was said by this very rich, famous fella called John D. Rockefeller, right? Who apparently was a very, very rich person of all time or something, right? And of course, we know that Warren Buffett, Uncle Warren Buffett, this year alone, he's going to make something like $5.7 billion from dividend paying stocks in his portfolio. So I think if we are investors for income, we are rubbing shoulders with some giants. Yeah. So now on to the next point. For this next point, I need my notes, okay? Because growing old, cannot remember everything. Okay. Remember I said that as an investor for income, there are many things that we can invest in. And if we invest in businesses, okay, I got that. Um, we must look out for businesses which have the ability and the willingness to pay us a dividend. If they are able but unwilling to pay us a dividend, then what's the point as investors for income, right? And during the podcast I did with the fifth person, I said we also want to pay attention to balance sheet strength. All right, we want to invest in these businesses which have strong balance sheet. So during bad times, they wouldn't have to stop paying dividends because their balance sheets can support that dividend, right? And of course, I mentioned a couple of stocks that stopped paying dividends during the COVID-19 pandemic that were in my portfolio. Um, so, of course, not all of us are accountants. And even if we are accountants, we must be able to look at financial statements from the point of view of an investor and not just as an accountant. But today, I'm just going to talk about some things to look out for in the balance sheet. Uh, for lay people like me who are investing for income, just some things that we want to look out for. So, the balance sheet is one of three financial statements. We have the income statement and the cash flow and the balance sheet. Okay, we look at the balance sheet now. Right, this is an important uh, thing to look at because if we want to answer questions such as what are the assets, or more importantly, is this company safe? Excuse me. A balance sheet is a good place to start. Okay, and in the why is this so? Because the balance sheet shows us the assets and the liabilities, right? And in assets, we have fixed assets and current assets. In fixed, they are usually all grouped together like this. So fixed assets, you usually have one total and you get the net value of all the items. Examples like freehold property, plants and machinery, your computers, your motor vehicles, excuse me, like trucks and cars, what you have that's owned by the company. And these assets have value to the business over a long period. What is a long period? Usually, any time that's longer than 1 year, right? It's important to note that these assets usually will lose their value either over time or with use. So over time, for example, a lease, like land lease, which is why I prefer uh, freehold properties to leasehold properties, especially leasehold properties with very short leases. So, regular long-time readers of my blog might remember why I avoided investing in a certain local industrial REIT because they had no qualms about buying properties with very short leases, like less than 20 years left. And in Singapore, we know that once the lease is up, the land goes back to the government. So they were doing that because that would artificially bump up their distribution yield, which on paper makes them look more attractive to invest in. But if you drill into the details, you will know why and why that's a ticking time bomb, right? Oh, okay. Before I wander off, that is one, depreciation over time, right? You have to be aware of that. And the second one I said was the depreciation with use, so wear and tear, like machinery and so on. Then there is also depreciation because of something becoming obsolete. So like computers, it might become obsolete after a few years. You have to upgrade, or else you can't run the latest stuff, not enough RAM or something like this. So you might have to write it off after 3 years and stuff like this. So, um, but we have to remember also that depreciation is a book entry and no cash is involved. So when you see a company reporting a loss, and the depreciation is a reason, then you don't really have to worry because they didn't lose any money in the real sense, right? So depreciation can reduce profit, right? So but don't just say, wow, the profit down, and then you jump. Go and find out the reason why. Okay, and then that's fixed assets. The next thing is current assets. Current assets examples are like stocks, money owed by debtors of the customers to the company, money in the bank, short-term investments. These are all current assets, right? So basically, they are assets with a value available in the short term, right? So it's like near money. Usually, what short term is understood to be a period that's less than 1 year, right? So from the examples, you can tell that these are the things that the company would sell, or because they are money, or can be quickly turned into money. Okay, then these are assets, fixed and current. Then we move to the other side of the balance sheet, and that's liabilities. Right. So liabilities are basically what a business will be called upon to pay, right? Either within the short term or the long term. So you have long-term liabilities and short-term liabilities. Long-term usually more than a year, and no, long-term usually more than a year, and short-term usually less than a year. So like less than a year, you have to pay maybe things like bank overdraft or money which we owe to creditors or suppliers, right? Then the next thing that we want to look out for is the working capital. Working capital is very important. This is the difference between the current assets and the current liabilities, right? Difference between current assets and current liabilities. So this is extremely important because without enough working capital, the company cannot pay its debts as they fall due. And in such a situation, it might have to stop operating, even if it's profitable, because it cannot pay. So you can say, oh, my company is very profitable, but I have a cash flow problem. That is a big problem, right? Working capital don't have, but lots of profits. What's the point? So you see a business selling many things, and then what happens? They book all these sales and say, "Oh, I sold so many things to but then the bank has no money." That's just one example. I mean, people who invested in some Chinese stocks listed in Singapore might have some PTSD moment when I say that, um, which is one reason why many people avoid investing in this, what I think it's called S chips. Um, uh, of course, when there's a shortage in working capital, then the entity could raise some capital. You can take another loan or sell some shares or sell some of their uh, properties or whatever to raise funds, which was what High Flux did, right? High Flux sold their building because they were in crisis. They didn't have working capital, and they had to sell their building and lease it back from a REIT before they finally went under lah. Okay, and the next point, which is I think important to look at as well as investors for income, and that is the point of provisions. Some people would call it reserves, right? Basically, these are provisions made by an entity uh, for when something bad happens and an asset might lose its value and it has to be written off, right? So, for example, if you are doing some trading as a business and some of your inventory got stolen, right? Then the value in the of the stock in the balance sheet will be reduced, right? And if this same thing might happen again, then you might want to take some measures lah. Some of the stock might also become obsolete, and if you sell it, it might not get the full value that it was able to get in the past, right? And of course, in the balance sheet, you have to show this at a reduced value, right? And when you create these sort of provisions, it reduces the profit. That's why, like, for example, our local banks, DBS, OCBC, and UOB, they're always making provisions for bad loans, because the loans to the banks, to the lender, the loans that they give out, these are their assets, and if the borrowers are not able to pay back, then they have to write off, and that's a loss, right? So you make provisions, it might reduce the profit, but if it is subsequently found that this provision was not necessary, the asset will be restored to its full value. So the loan, in the case of the banks, will be restored to its full value, and the profit will correspondingly increase in a later period, right? But this is something we want to bear in mind, that it is often necessary to create a bad debt reserve to cover money that may not be collectible from customers. So I think that's about it. I mean, there are many more things that we should look out for in financial statements as investors for income, or as serious investors in general. I will leave links to a few of my blog posts which I published in 2010. That was when I was still a very newbie blogger about financial statements. So if you're interested to find out more, you can go to those blog posts and read on your own at your own leisure, right? And of course, on screen you see another blog that I published which was earlier this year in January 2023 about how I have made $2 million in passive income. So if you are working towards financial freedom, um, I believe that investing for income can only help. It will not hold you back. That is my personal belief. And I'm just sharing my journey and what has worked for me. And I still believe if AK can do it, so can you. But you have to find your own sweet spot. It's a bit like Goldilocks and the Three Bears, right? Oh, this porridge is too hot. This porridge is too cold. But this porridge is just nice. So find out what works for you, what you are comfortable with. As long as as it works, it's good, right? So no need to argue, no need to fight. Life is short. Why make it shorter, right? So that's all for now. I'll talk to you again soon. Remember, if AK can do it, so can you. Of course, please like this video. Thank you and bye bye.